So when it comes to social media type stocks, Facebook is probably the company that comes to mind first because it is the largest, it is $1 trillion plus business, and it's such a dominant company, right? They have so much cash, they've been growing extremely well over the years, and everything about the business fundamentally is just perfect. But what this also really tells us is that there's a massive opportunity when it comes to social media. Facebook has really, carved the path for this niche, and other players have now started stepping in and taking their piece of the pie. Other businesses like Snapchat, $120 billion market cap, Pinterest, $35 billion market cap. And of course, you have the stock we're discussing today, Twitter, with just under a $50 billion market cap. They're all in this space, they're all fighting for a piece of that social media pie. And I think that, Facebook has really shown us what the true potential for these companies could be over time. So in this video, guys, we're gonna be talking about Twitter stock. We're looking at some of the fundamentals of Twitter, why I think this business is poised for some amazing things going forward. It's not the same company as it was, say, a year or 2 years ago. I think it's much, much better now. And I'm also going to be drawing some comparisons throughout the video to some of the other social media businesses to show you that Twitter may be a buying opportunity here. So as always, if you enjoy this video, you appreciate it, share it with a friend, hit the like button, and subscribe if you're brand new to the channel. Anyways, let's get into it, guys. So the first thing I think you need to make sure is top of mind when it comes to Twitter is understanding that this company is going through massive transformation. They're focusing on things they haven't really put a lot of focus on before, and if things pan out well, if they execute well, it could be a monster company in the future. Not to say that a $50 billion company isn't monster already, but I'm talking hundreds of billions of dollars. That's the potential here for Twitter. For the longest time, Twitter has been kind of a chill platform. People go on there, voice their opinions, comment on things, just tweet threads, tweet all this stuff, games and movies that they enjoy, whatever it is, right? It's just kind of been a chill platform. And the company has just been chugging along. They've, had new user growth every single year. They have a little bit of revenue growth every single year. The business is doing well. There's nothing really bad to say about it, but it just wasn't really as exciting of a growth story as some of these other players like Snapchat or Facebook. Quite honestly, from an investment perspective, it seemed like Twitter did not care about the investor base. They did not care about, making a ton of money, making a ton of profits, growing rapidly. They didn't care about that stuff. They were like, we have a platform, it works, people enjoy it, let's just keep doing this until it doesn't work anymore. So this kind of brings me to the first new thing that I've noticed here about Twitter, and that's their push to grow their users. The company reported 206 million monetizable daily active users, which is up 11% year over year. But the point to note here was the push with global conversation. While the monthly active users from the US from Twitter seems to have kind of plateaued in recent quarters, at least for the time being here, we can see that international users has picked up the slack and is pushing new highs. Overall, put it all together, this paints a good picture for investors because when you look at the numbers, it is still a growing business with their users quarter over quarter across the world. This is important because their revenue is split fairly evenly, about 50-50, between the US and international. And over time, international users should take a bigger piece of the pie here. And as this expansion continues, Twitter should benefit more and more. So there's still a lot of potential here. Now, there's definitely some good reasons why I'm optimistic on this company growing rapidly. In Q2, they reported growth of 74% year over year, which was their strongest Q2 ever. And yes, granted, this was coming out of the pandemic low, so it is inflated a bit, but still very strong showing to bounce back this strongly. Now for Q3, they expect to pull in revenue of $1.22 to $1.3 billion, which represents around 20 to 40% growth, which is still very impressive. Now when looking at what analysts are projecting next year, it kind of surprised me a bit. They are expecting things to cool down, and they think that Twitter is going to pull in around $6.25 billion in revenue, or 23% growth year over year. Now here's the thing, we are seeing decelerating growth, but that's kind of objectively speaking from the numbers. But the question you got to ask yourself is Is this something that will kind of level off and we'll see sustained double-digit growth? Or are we going to go into single digits? What's really going to happen? That's kind of where your judgment as an investor has to come in, based on the facts, based on what the company is doing. And what I think is a good indicator is how well this company has kind of pushed new things, try to entice users to use the platform more engagement, all that stuff. Based on that, we can kind of see how serious they are about continuing this growth, accelerating it once again. So let's talk about some of the new features that they've actually announced in just this year alone. Earlier this year, Twitter launched Super Follows, which is to encourage content creators and more popular Twitter accounts to post premium content behind a paywall, which essentially offers their followers or fans an option to pay for exclusive content. And Twitter makes it extremely lucrative for these creators because they allow them to keep up to 97% of revenue earned, up to $50,000 in fees, at which point it drops to 80%, but this is still much better than other platforms like YouTube, for example, which pays creators much less than what Twitter pays here. This definitely makes it a lot more motivating and encouraging to build a brand and following on Twitter. So as you grow, not only do you benefit from monetizing your fans and kind of, offering them some more content for a fee, but Twitter also benefits from this because they're providing you the platform, and for every transaction that happens, they take a piece of that. As of right now, this is still in its infancy stages, only available to Canada and the US, and only available for content creators on iOS. So this is definitely something that will expand over time, and I think will be one of their most popular features. Another feature that they rolled out in May to a subset of users was a tip jar. Now this allows followers to tip their favorite creators, favorite accounts, adding another reason to become a more active content creator on Twitter. Clearly what Twitter's trying to do is encourage people to just tweet more, engage more, post more valuable content that other people find useful, and in return, those people that you're building up as an audience can pay you back by joining things like Super Follow, by giving you tips. There's some other stuff I'm sure they're working on behind the scenes as well. Twitter's really trying to push for content creation, which I think is extremely important for the future success of them, and they finally recognize this. Twitter Blue was yet another feature launch, but this time it's targeted towards the user experience. Twitter Blue isn't meant as a replacement to the free Twitter that we all use. It's just a paid option to enhance your experience on the platform, and this is developed from feedback from their most active and engaged users on Twitter. Features include bookmark folders to organize saved content that you can go back to later on, a heavily requested option to edit or undo a tweet where you have 30 seconds to undo if you change your mind. I'm sure a lot of people will definitely be paying for this kind of feature. A reader mode for a more immersive experience when reading threads, and this is especially useful if you follow any financial Twitter accounts, because a lot of people post threads on there and the experience is okay, you can follow, but I'm sure it can be a lot better, and that's where Twitter Blue comes in to kind of address that. And all of this is currently available in Canada for $3.49 a month and Australia at $4.49 a month, with the plan to roll out to the US and globally once they feel that, this provides enough value for users at that monthly fee. So these are just some of the features released this year alone, and I think we're going to see a lot more coming in the following months and following years because this is a heavy focus for Twitter. One thing you will notice is that these are all different streams of income for the business, which will eventually become recurring revenue for them. Think about this. If you sign up for Twitter Blue, you enjoy the experience, you're probably going to pay $3-4 a month to keep that going because you use Twitter so much, it's worth it, right? So that's one revenue stream. Then if you have your favorite content creators, you super follow them so that you can see exclusive content. Probably going to have a few of those accounts that you follow, so that's another little piece of the pie that Twitter takes from those content creators as well. And I'm sure, like I said, in the future, they'll have more options for both content creators to make money and users to spend money. And then Twitter's kind of the middleman, just kind of takes a little bit here and there and grows their business much bigger. So bottom line, as an investor here, potential investor in Twitter, this should excite you because this means that there's going to be more predictable revenue, more growth in revenue. They can probably squeeze out more dollars from the users. There's a lot to like here with this model. And going back to their outlook, Twitter clearly states that they are going to continue spending heavily on headcount, specifically in engineering and product, which means that they have a lot more in the pipeline that they want to roll out and try to see if it sticks with their users. When a company is prioritizing on new features and engineers to develop those features, it shows that they're serious about one thing, and that is making the business better. They want to grow the business. They want to make it more, relevant to users, more kind of like a sticky product where people just need to use it all the time. And I think that Twitter already has that as a core user base. They have millions upon millions of people that use it every single day. But their hope, of course, over the long term is to entice even more users to become daily users. This is clearly a different business than it was a few years ago. They're prioritizing the right things here for investors, and that is why it has me interested as a potential investment. Like I said in the beginning of this video, social media is a lucrative field. You have Facebook that's proven out the market for how massive things can get and how much money these businesses can make. You have companies like Snapchat, tiny business. I remember when this stock was like $14, $15 a few years ago. Now this thing is pushing close to $100. The market cap's 100+ billion. Guys, the potential is there as long as these businesses can execute. That is going to be the key. Now, from a fundamental perspective, they have strong financials and a strong balance sheet. They have over $8.6 billion in cash, over $15.3 billion in total assets. And on the liabilities front, they only have $2.2 billion of current liabilities and $7.6 billion of total liabilities. And this just means that they can cover all of their liabilities pretty much with cash. So I'm not really concerned at all here for this company. Essentially, they have 2 times more assets than liabilities, and this is a green light for me. So now I think the question is, okay, we know this is a growth company, or at least that's what they want to be going forward, but is it the right time to buy the stock? Are we paying a fair price for this? I think when looking at businesses like Twitter here, price to sales is a pretty good metric because they aren't focused on profitability, they're focused on growth, and eventually over time that profitability will come like Facebook has shown us. Twitter currently has a price to sales of around 11.38, and historically this is about average for the business. But again, the company's future is looking a lot brighter than it has historically. So seeing the same price to sales here could signal that investors are disregarding what potential this company still has. By comparison, here's what Snapchat's price to sales looks like. It's a whopping 34.88. This is more than 3 times that of Twitter's. And then, here's the gold standard, Facebook with a price to sales of 10.27, close to Twitter's, which leads me to believe that Snapchat here is the outlier and is possibly quite overvalued. Now I know, Snapchat bulls are gonna say Snapchat's growing much faster than these companies, and that's true from a percentage perspective. However, the question is, does that warrant it a 3x premium over these other players? Looking at a few years at projected growth, yes, Snapchat is growing faster, but its metrics are comparable to that of Twitter when we look at dollar amounts here. In fact, Twitter is actually expected to be profitable going forward, where Snapchat, you gotta wait a couple more years, up to 2023 probably. So technically you are paying a more premium valuation here for a company that loses more money. Again, profits aren't really the make or break point here for these companies, but it's interesting to see these two compared side by side, growing, somewhat similarly. Yes, Snapchat is faster, but does that mean that you're willing to hold this at a much more premium valuation, losing a lot more money, versus Twitter, which is a reasonable valuation by comparison, and making money? That's kind of where you have to make your own judgment as an investor. My opinion on this is that the market is actually giving Snapchat too much of a premium here. I think it's a bit overvalued here at these current prices, and I think that a proper balance would probably be that Snapchat comes down, Twitter goes up, and they kind of meet somewhere in the middle there. Looking at Twitter's stock chart here, you'd think that this company is failing or losing steam. But from what we just went through today, guys, the reality is far from that. They are firing on all cylinders. They're expanding into new products and services. They're expanding into new markets, and that'll just help them sustain strong growth in many years to come, in my opinion. Investing in Twitter today is probably not the most exciting investment, probably not the most obvious investment, but I think you're kind of betting on a turnaround here. Facebook and Snapchat, they're pretty much making new highs. Investors are all over those stocks, and you could probably argue that Twitter should also kind of be in that realm, pushing highs, doing well based on the metrics we saw. But right now, we don't see that in the market. So this could be an opportunity to start building a position, adding some shares in here at these prices. $50 billion, not a cheap valuation for Twitter, but a reasonable one, which I think has a potential to double or triple or even quadruple over the next, 3 to 5 years, maybe a little longer than that. I think we'll have a really exciting 2022 for this company as all these new services kind of get more integrated with the platform, launch more globally, and we start actually realizing the revenue from all of these different options that people have to spend money on. And I think at that point, investors in Wall Street may come in and say, Twitter is actually looking quite good here. They're making a ton of money. Their expenses are now kind of dropping because they've invested in the staff, they invested in the products. Now it's just a matter of just letting the product do its thing and bringing in that money. So I think maybe we're still another year or so away from the stock just being on everyone's radar and everyone wants to buy in and all that stuff. But that's kind of where I specialize in the stock market personally. I like buying these companies when other people hate them, don't talk about them, disregard them. That's when I build my positions, and then when everyone wants to get in, I sit back, I hold, and enjoy the gains. Now I'll say this, I still have a little bit of reservation here when it comes to Twitter. I'm not 100% on board yet. I may initiate a position soon. As of recording this, I don't have a position. But if you are interested to see if I do buy into Twitter, what other stocks I hold, join our VIP group, link description down below. I will say that Facebook is one of my largest stocks in my portfolio. I've been talking about Facebook for a long time on this channel. Go back and watch the videos. So I kind of understand the social media space quite well, and I think that Twitter could be another good opportunity long term. Let's just leave it at that for now. Anyways, guys, hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one.